Hey everybody, good morning. Welcome to today's episode of Stock Trading Pro. In today's Stock Market Live, we're going to discuss AMC and GME. Is AMC stock one of the best stocks to buy now, or is it simply another meme explosion and a short covering rally? They had some news last week about getting into a whole other business. They're talking about making money from investments right now. Personally, I think they're scrambling a little bit with all of the online streaming services. I like going to the movies. I love getting out of the house, but I think that they're business model might be a little bit broken, a little bit changed, but give them credit. They're actually doing something. So today we're going to talk about whether or not AMC stock is a buy right now after yesterday's massive, almost 45% rally. We're going to break it down from a day trading perspective and whether or not it's a good swing trade or not. We're going to give an AMC stock prediction and where I think it can go to. But I think even more importantly, we're going to break down sector rotation today and take a look at a bunch of stocks that are at the top of the sector rotation. And we're going to pick out a few of them. I think we have roughly a dozen stocks that we're going to take a look at. We're also going to talk about today what Uber stock is setting up on the charts that is very similar to another stock that exploded last week. And we're going to be looking for follow through there as well. All right, so stick around. Be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. I really appreciate it. Obviously, it's our mission to help you make better stock trading decisions. Everything here is for educational purposes. What I want to first start out talking about, we're just going to go through the progression of what we normally do every day. I want to say good morning. Hey, Dustin, good morning. How's it going, pal? I'm glad you brought that up. Last night's coaching call was amazing, and I'm going to show everybody the outline of what we discussed last night. Cynthia, nice to see you back in a boot camp. Good morning. Hope you're having an awesome morning. So we're going to actually start out with the market. We're going to head right over to the market, and then we're going to work our way over into AMC stock and talk about whether or not we're looking at an AMC short squeeze or an AMC rebirth, where there's going to be something new in that stock. So we're going to start over here. Obviously, the market yesterday staged another rally. We punched through or kissed that resistance level that we've been watching. One of the things we've been talking about is the market really did not trade into kind of one of those boxes that we like to talk about to kind of get off the change of trend. We just basically been going straight up since the Fed made the interest rate announcement and raised interest rates. And now we're kind of peaking through that level. A slew of economic data this weekend. That's really one of the biggest things we wanted to talk about. Something else we talked about yesterday was Apple stock. We've been talking about Apple stock and how strong it's been. And somebody, Dilip, actually in our community last night, brought up a really good point, because if you understand the longer big picture, the macro picture of the markets, typically when interest rates go up, that's not good for technology stocks. But Dilip brought up a really good point yesterday, and he's like, well, they have billions and billions of dollars. They're not really borrowing money the same way some of these smaller companies might be doing right now that don't have the same cash or cash flow, which is kind of an interesting perspective. And I think he's right, which is one of the most important parts of having a community where we can have these kind of regular discussions. So what we're going to do is we're going to break down AMC stock, both from a day trading and a swing perspective, as well as GME. Then we're going to break into sector rotation, and we're going to talk about, actually, let's do that. Let's do AMC first, and then we're going to go into the coaching call. So first off, hey, Min, good morning. How's it going? So we're going to go back out to the daily charts. In a minute, we're actually going to get into this, which was our Order Flow Pro coaching call last night. We just got into some amazing, amazing topics. But I think this part right here, where we broke it down into actual day trading ideas for the first part of the day. One of the things we discussed last night was a really, really advanced topic on how professional traders manage their entire day. Now, a lot of people go into the day just hoping to make money. Professional traders don't do that. If you don't know, I actually own two trading firms in New York City. I closed them down in end of 2010 into 2011. The market was just getting a little bit too chaotic at that point to train new traders and give them my capital. So I just opened up a smaller office in Hoboken, not that far from the PATH station, if you happen to be familiar with that area in New Jersey. So we're going to touch on a little bit on this stuff right here about the topics that we discussed on day trading, also how to spot algos in your trading. We covered a bunch of different things. And something we've been talking about here on these live streams quite a bit is trading inverse ETFs. Now, the market pretty much from January started a big move to the downside after we hit all-time highs. And a lot of traders were scrambling to find the best stocks to buy now at that moment, simply because the market was near all-time highs, but the persistent move for the first 2 months of 2022 was to the downside. So we started to discuss either buying puts on the way down as a strategy, or if you're not comfortable with short selling, buying the inverse ETF. So we had a question last night on our Order Flow Pro coaching call, which was essentially, I understand how to trade them, but I can't trade them properly, even when the market is doing exactly what you want it to do, which is if the market goes down, the inverse ETFs go higher. And we compared them to a different instrument, and I'm going to walk you through that in just a minute. But first, obviously, let's get into the AMC news from yesterday, the AMC stock price action and the explosion from yesterday. Now, just putting it into context, in that window right there. Now, this is obviously a pretty decent move off the lows. And if we do just, even from a percentage move to where this broke down, and actually I want to bring something up in a minute there as well. Even to there, that's a 60% move. So the biggest thing I think I want to get across is if you did game planning and AMC happened to have not been in your list because, well, first of all, about a week and a half ago, it actually broke down and didn't look awesome. The stock already moved 60% in 8 trading days. So less than 2 weeks, the stock moved 60%, which, by the way, if you are a day trader right now, this is day trading heaven. I don't even know if I could say it any other way. If you have discipline, there's a lot of opportunity right now, but you need the discipline to step aside or lower your risk when the market's not doing what it's supposed to do, or I should say when it doesn't meet the model that you look at the market in. So AMC exploded. It went up 60%. And if it was in your game plan, congratulations. I actually didn't have it in my game plan because I was focused on some other stocks. Specifically yesterday, we were talking about the Bitcoin mining stocks, and Bitcoin punched through that 45,000 level. We want to break it down both from a swing trading perspective, potential AMC stock prediction for where we think it can go. It's got 2 different levels I'm watching, and how you could have potentially day traded the stock yesterday. One of the biggest questions that we get is when a stock moves really, really fast, when it's showing momentum and you feel like it's gone too far, too fast, you get this in your mind where I better book some of this, or I need to know what I plan to do. If it reverses, I want to make sure that I book those profits. So we're going to actually break it down from a bigger picture first, swing trading AMC stock, and then bringing it down into yesterday's day trading. Take a quick look at GME, but then we want to get into consumer cyclical stocks, and I want to give you a big list of the best stocks to buy now. Some of them are overbought. Some of them are way beyond the optimal entry, but that doesn't mean you can't trade them as what we call a bullish echo. A bullish echo is a stock that is clearly bullish, but well beyond the optimal entry for a new swing trade, but you can still get a short-term trade out of it. You're just not looking for the same risk reward. So let's start out with AMC. So basically what I'm trying to say here is give yourself a break. If you didn't happen to catch this yesterday, I don't think anybody could have predicted that, so to speak. Now, was it bullish? Yeah, absolutely. Did it push and pause? Absolutely. But a 45% move in one day, that's a pretty darn big move. And if you follow what a lot of people talk about, which is if we kind of bring this into the screen right now, and you've probably heard the term short float. So if you type in, you go into FinViz, you type in any stock, probably one of the easiest ways to do it. You kind of drift over here and you look at short float. Now, there's a bunch of stocks, and actually Fred in our community this morning talked about BROS as another one, just to give you an idea. So this actually has a 15% higher short float than AMC, and you saw what AMC did yesterday. The symbol is BROS. So essentially why a lot of people look at the short float is that there are people who are betting the stock will go down. That's the short float. So what ends up happening is if a group of traders starts to like or have conversations around going after buying that stock, you now have a group of people looking to buy the stock. You have a group of people that need to buy the stock to get out of the short sale if it starts to go up. And now you have bullish energy to the upside where those moves can be very, very fast. So we've seen that in GME and we've seen that in AMC. Now, both of them are not necessarily meme moves like we had about a year ago. I think that these are more market related. I think this is more news related. There was news on AMC getting into different business investments. GME, same exact thing. But I want to point these out to you because there's a very big difference. And we talk about this a lot when we're talking about news plays that and earnings specifically, that technical setups and order flow is a strategy by itself, and tape reading. News catalysts are a completely different trading strategy. And I just think that a lot of people don't separate the two, where they are very, very different. One of the things that we used to talk about all the time in my trading floor is I love good setups that have no news because then I knew that I was trading the most recent order flow. I was reading the tape to find the optimal entry, and I could size up, get a little bit more share size because I don't expect anything unexpected. And those were the easiest trades for me to take because I had a lot of conviction that I was just trading the tape. News plays, and I can't get this across differently enough, news plays are a different strategy. Earnings plays are a different strategy. Pre-market trading is a different strategy. After hours trading is a different strategy. Short covering meme stocks is a different strategy. So I want to say that to you because there's a lot of people that watch these stock market lives, and they're kind of trading working full time, and trading's kind of a side cash flow way for them to make money. If that happens to be you, I want to make it clear that they're different strategies, which means that you need to handle them differently. As fast as they go up, and I want to give you the perfect example of this. Let me just kind of bring this over on the screen. We get asked about this stock often, and this stock exploded. And I remember in one of our recent coaching calls, somebody was talking about buying this, and I said, look, these stocks do not have everyday institutional attention, and unless you're at your screen watching and able to place orders in real time, these are probably not the right kind of stocks to be getting involved with if you're a part-time trader who's not at your screen and you can't be making these faster decisions. Now, AMC stock and GME stock are a little bit different. They have a little bit more attention on them right now. The liquidity, which is a big part of trading too, they trade a lot of shares on a daily basis. We just give you an idea of AMC and what that means from a liquidity basis. So if we pull up the volume over here, you can see the explosion in volume. Yesterday was 226 million shares. You can see on a regular basis, it trades roughly between 20 and 30. So it's really, really a big difference between a stock that has predictable institutional attention versus a meme stock that only spikes once in a while. And maybe we can even say that about SPAC stocks as well. So I'm bringing this all the way back into AMC is that I never want to say anything safe. I never want ever. I don't want to say anything like that. I never want to say something is easier to trade, but you need to qualify when you choose to get involved in some of these stocks that have these massive spikes. Again, if you didn't know, yesterday's big move in AMC, which was 44.9%. So qualifying that as a stock that has reliable liquidity, even though yesterday was 220 million shares, 226, I believe, it normally does well over 20 to 30. So AMC is a little different from INDO in that AMC has a lot more reliable liquidity. And the reason I keep bringing that up is if you're choosing to day trade AMC stock or GME stock or swing trade it, there's plenty of liquidity where you can reasonably get in or out where you'd like to, even with a market order, because of the amount of shares at every price level. So how does that translate into basic technical analysis and reading the order flow? Well, it meets all of the criteria of a push and a pause, and obviously has bullish momentum right now. The question right now in AMC stock is, where is the right price to get in? And where is the right levels that we can reasonably expect price to travel to? Now, we all know that reasonable is not normal in the market that we're in right now. Just doing basic technical analysis, you would say that this is the last place that sellers came in and did something significant, and you would think that that's all that's left in the trade, and that might be true, and that's easier to look at after the fact. But we're talking about now, which are the best stocks to buy now for Tuesday heading into today, and I think that's one of the things that makes our channel a little bit different. Our YouTube channel talks about what we plan to trade, not what happened 2 days ago, because I want to give you ideas. I want to give you insights into the stock market. And when you're looking at stocks, you want to have the mindset of, okay, this is a pretty good argument. If I choose to accept risk, it's going to be an idea that if it works out, great. If it doesn't, I really like the idea in the first place. So the way I'm breaking down AMC now, if you're looking for a swing trade on this stock, which means more than overnight, so more than just day trading, you're holding it overnight, what I'd be looking to do on this right now, clearly we're not risking yesterday's candlestick in AMC. So what I'd be looking to do is I'd be looking to drop down on a lower time frame, and you can see here actually where the hourly candles gave you a chance to get involved before the last 2 hours of the day. So if you were looking to get involved with this as a swing trade and you missed this bigger part of the move yesterday, what I typically do, and what I suggest to members that are not able to risk or not wanting to risk, is drop down and find a candlestick pattern on a lower time frame that gives you a chance to get involved. So if we're looking at AMC stock right now, I would not be looking to buy as soon as the market opens if I'm looking for a swing trade, because the risk is simply too high compared to the reward if we're looking at a swing trade in AMC stock right now. So there's one big candlestick pattern that I think is probably the easiest one, and probably the one that is the easiest to manage the downside on, where the risk is acceptable for the new potential reward. And that's a breakout of a consolidation on the 60-minute chart. So we actually just looked at that here, which is this candlestick here. So we had the first hour of trading, 9:30 to 10:30, 10:30 to 11:30, 11:30 to 12:30. And then this candle right here completely paused inside this one. So this candle, this contraction in volatility, had a bearish U-turn into an inside candlestick. That set up this move for the last 3 hours. Now it's down a little bit this morning, but that's not the point. The point is we're trying to come up with ideas of how to manage the downside in this massive volatility in AMC stock and how to put on the next trade. So that's how I'd be looking to enter a new swing trade as far as AMC stock. Now, we know that the norms in the stock market right now are kind of way expanded. So where we should be stopping versus where we actually stop, we have to let the price actually tell us that's going to happen. So now, again, what's the trade management if we get AMC stock and this kind of volatility and it's moving in your favor, and you know it's a short-term trade if that's how you game planned it? Generally speaking, with the type of volatility that we're having, because these stocks can reverse on a dime, I would be looking for the previous completed candlestick on the 60-minute chart to be taken out as a stop loss. So I'm going to show you this. Now, we got a good question yesterday about the difference between a stop loss and a trailing stop loss. And the way that I talk about it and the way I teach it in the boot camp is a stop loss means you haven't moved your stop up to break even at all. So you put the trade on, it's kind of fluctuating, and then it finally moves in your favor. So you're going to take your stop loss and move it up to break even. Even at that point, it's still a stop loss. In our language, a trailing stop loss is when you have a profitable trade. You're going to allow the stock to fluctuate, but if it comes back and takes you out, that trailing stop loss is going to be booking a profit. So I just want to make sure that the trader lingo is the way that we use it. You can use it if you want. Stop loss is it's not profitable yet, maybe break even, best case scenario. Trailing stop loss is when you move it up, you allow it to fluctuate, and it keeps going and you make more, or you get stopped out and you're okay with whatever that trailing number is. So on the hourly chart of, AMC stock, what we'd be looking for here, and probably a good example is, let's just use this as an example here. And I want to pull this into the screen so it's easier to see. If you get momentum as it moves to the upside, what you'd be looking for is one of these types of candles. Remember, we talk about a energy candlestick or a melted candlestick. So now what we'd be looking for is when you get a melted candlestick. So again, if you happen to be new to the channel, I just want to explain the two different types of candlestick patterns, because they're really the only two candlestick patterns you need to know, which is you have an energy candlestick where there's a big difference between the open and the close, which is usually a large red candlestick or a large green candlestick. If it's green, there's a lot of buying pressure because that means it opened here and closed up here. So that's one energy candlestick pattern. The second one is a melted candlestick. You might know it as a doji candlestick. I actually call it a melted candlestick because it traded a lot and the candle melted to the point where there's only a small body left on the candle. But to call a melted candlestick is good for visualization, but what does that candlestick mean? And trust me, I'm bringing this all the way back to managing AMC stock. A melted candle, we call indecision, because let's take a daily candlestick. If it traded for 6.5 hours during the trading day and basically opened and closed in the same spot, there's indecision. So if you have energy, okay, expect follow through. If you get a melted candle that's indecision, that should make you sit up in your seat and say something changed. So a question that we get all the time is, which time frame do I look for energy candlesticks and melted candlesticks? So the higher time frame always dominates. So you're looking at the higher time frame for order flow, and then the shorter time frame is where we look to enter those trades using melted candles or energy candlesticks. So it's higher time frame, lower time frame, Then you go back to the higher time frame to manage the trade, so you make as much as you can on the winning on if you happen to have a winning trade. So tying this all back to AMC stock and managing an active swing trade in AMC stock right now is, as long as you have energy candlesticks, you continue to let the stock fluctuate. As soon as you get a melted candlestick on the time frame that you're watching, that would be a signal to me where I'd be now moving up my stop loss up to a trailing stop loss to protect those profits, because something changed in the order flow and the tape now looks different. So if we take a look at what that means on AMC stock, you can actually see it here pretty well, that we had two indecision candlesticks, then an energy candlestick with good volume, then a melted candle, a melted candle, a melted candle, and a melted candle. So energy followed by a bunch of indecision. So now if we take yesterday, we actually have energy candlestick, good volume, energy candlestick, good volume, a bearish U-turn, which is actually a bearish energy candlestick in this case, followed by a indecision candle. Now, you have a choice at this particular moment. Is this a spot to exit the position because you had a bearish U-turn, which is a bearish momentum candlestick in AMC stock, versus is this simply a pause before the stock takes off again? So if you just use the candlestick lesson that we just did, energy, energy, bearish energy, melted candle, pause, you now know that all you're doing is moving up your trailing stop, giving it room to fluctuate, and now you're going to be taken out if it breaks the previous completed candlestick. If it doesn't, you're now in position to allow the stock to give you a little bit more profit on that winning trade. And I have to be honest with you, that is really the secret to trading. The secret to trading, and I know we talked about it last week, is that once you understand taking your loss is a part of the business, it's nothing more than a business expense. You saw the stop loss, you get out, you go to the next trade. Learning how to make more in your winning trades is, quite frankly, the secret to trading. And it's understanding and stacking that order flow that makes the difference. Because once you understand how to stack the order flow and understand how to use what we call a profit maximizer, you kind of have all the pieces to the puzzle. You just have to not mess it up and trade against the strategy. So I want to walk you through exactly how that could have led to a really big profitable trade yesterday in AMC. So you had energy candlestick, bearish U-turn, which is a momentum candlestick, into a pause. So you basically had a push and a pause. Now, when you see this melted candlestick, what you do is you move the trailing stop to the last completed candlestick. And you don't put it exactly at the price. You want to put it a little bit below that. So what you're doing is you're recognizing that the tape has changed. And now you say, okay, I have to sit up in my seat. If this stock reverses, I'm positioned with my trailing stop. If it doesn't, and I'm going to allow the stock to fluctuate and have a chance to move higher, which is actually what the stock ended up doing. So on the daily chart yesterday, we got up and we hit that significant resistance point right in this level we're talking about. Now, because of the way the market's trading right now, I'm not looking for this stock just to roll over because it hit resistance. I actually do believe that over the next week or so, we can see this actually end up heading up towards the next $42 level. So I want to break that down really clear on what the way I'm looking at AMC right now. AMC right now, yesterday's daily candlestick is way too much to risk, which is normal risk on a swing trade. So I'm looking to drop down, waiting for the market to open. I'm waiting for hourly candlesticks to unfold and give me one of those pauses on the hourly chart. And then that's going to be my entry and my stop loss. If AMC continues on the hourly chart to progress up towards that next level, I will use the profit-taking strategy that I just explained. If I don't get stopped out, $42 sometime over the next week or so is where I'd be looking. If the stock opens lower today, then I have different price action that I'm going to be looking at as simply a day trading strategy. So I gave you the hourly chart. Now the day trading part of the AMC stock is I need to have let me actually get these guys off of here. It will be different parameters where, as you know, we generally break it down first from the daily and then we go down to the hourly. So now each hour in AMC becomes a whole different universe for me before I even start to look for any type of entries. So the AMC day trades today, similar to yesterday. Now, again, I said it wasn't in my game plan. I didn't trade it. I'm helping you for today and how I plan to trade it today. I was focused on the Bitcoin mining stocks yesterday. Each hour, because of yesterday's volatility for me now, 9:30 to 10:30, 10:30 to 11:30, And as we know, the opening price for the week and the day, those are my reference points. So those are going to be how I'm going to make a day trading decision in AMC before I even look for a spot to buy. As long as it meets the day trading criteria that I just outlined, only then will I look for buying opportunities. If it starts to trade lower and doesn't meet those criteria, so from the open or from each hour, I simply leave it alone. I'm not going to short it because of the strength yesterday. If it's even shortable, it might even be hard to borrow. I'm not sure. So that's the breakdown from AMC from start to finish from yesterday and what we could learn from it, and then how we're taking that into a day trade and a swing trade opportunity. And everything that I just talked about was also applicable to GME, which has also had a meteoric rise recently of 143% in 7 candles. 7 candles. Okay. This is a good question. Should wash sales from stop prevent entry? And I want to say this in the most respectful way. I'm not an accountant. I do not talk about anything tax related. You would need to speak to your accountant about wash sales. I'm only here to talk about trading opportunities. Everybody can make their own decisions about wash sales and all that kind of stuff. So I'm on video. I need to say that as explicitly as possible. I will not touch anything that's related to taxes or anything like that because I'm a trader. I'm not an accountant. So anyway, I want to walk over into the sector rotation that we promised that we were going to talk about, which is here. So obviously coming into the day yesterday, going into yesterday's price action, this is last Friday's close, the month of trading, super strong. We actually had a couple of across the board. Energy was strong. Energy now is kind of working its way down, which is really perplexing right now. But the one that I want to focus on right now is consumer cyclical. And we've kind of floated to the top. So you can see consumer cyclical and technology being carried mostly by just a couple of stocks right now. But we're going to take a look at consumer cyclical stocks, and we're going to break that down because I want to make sure that you have a bunch of ideas right now in this area. So obviously GME is one of those stocks. Tesla also is one of those stocks. Now, clearly, Tesla making now one of the biggest runs that it's had. Now, you could say that Tesla is a little bit beyond the optimal entry right now, and you'd be right based on the fact that it had a gap yesterday, but Tesla also paused here for a couple of days. And as we mentioned yesterday, Tesla was a trade that I was really looking forward to trade yesterday. We also said that wherever Tesla opens yesterday, that would be my line in the sand. And you could see how it unfolded perfectly yesterday. Where pretty much the entire day yesterday, you could have been going from hour to hour on a day trading perspective, looking for entries. So GME and Tesla are two of the stocks in the consumer cyclical area. Let me actually get this off of there. In this group right here, that's what we're focusing on, consumer cyclical. So GME, Tesla. Now, some of them are not in raging uptrends. You can actually say this here. Let me actually get this off the screen. I want to work this chart live with you because we get a lot of questions about drawing the boxes. So if we are using this move to the downside, that's one bigger move. But because it already broke, we're actually going to adjust this and go to the most recent price action, which is now here. So Chewy right now, where you got a triple bottom here, you got a push and a pause, a push and right at the breakout level. And I think more importantly, you're actually in the group that is showing the greatest pre-market, the greatest recent price action. You actually have the industry group on your side as well. We've got a couple of minor resistance levels here, but the first one is around 54 and change. So you still have another $5 to go there. And the next one is at 61. So you got a couple of different levels here. So again, what we're looking at now are some of the best stocks to buy in consumer cyclical because they're showing some recent price action. Another one that somebody just mentioned before, I forgot who that was, right here. AMC BBY. So what we're talking about now at BBY, very similar conversation. Now, here's the thing I want to point out. Why BBBY is a little bit different from AMC. Remember these are the details that you need to really level up to and pay attention to and actually act upon. Remember how we just talked about energy candlesticks and melted candlesticks, and we were looking for stocks that have reliable smart money attention. And the way you see reliable smart money attention is in the types of daily candlesticks you get, and that's going to influence your conviction to allocate risk into those ideas because you expect reliable follow through. So I'm going to show you a chart right now. Remember what I said before about melted candles, energy candlesticks. One means, yes, somebody was doing something obvious there. The other one is indecision, and a whole bunch of nothing happened after 6.5 hours. So look at the chart of BBBY and look at the amount of melted candles on this chart versus the amount of large green candlesticks. There's a lot more indecision on this chart. Look at melted candles all over the place, right? Yesterday was amazing. Yesterday's volume was pretty darn good. And if we break that down, yesterday was around 12 million shares. So I want to be clear about this because it's pretty interesting, whether we're talking about BROS and a potential short squeeze because of the short float, or BBBY and a potential move to the upside like it had yesterday. BROS and BBBY are different stocks than AMC because it has a lot less. AMC has a lot more liquidity, which makes it, I want to use the right compliant word, means there's a lot more shares and you can reasonably get out or in where you want to. BROS and BBBY are different because they have less liquidity. So yes, it's exciting. Yes, it's interesting, but it's different. I just want to make sure I point that out. And that difference means that you trade the stock differently from a share size perspective, getting in or out of those trades, which actually brings me over here. I just want to bring this up again here, because that was a big part of what we talked about yesterday in our coaching call. Process for managing the first 30 minutes, a profit strategy for managing the first 30 minutes, share size allocations for the first 30 minutes, and the mindset for managing your entire day. So managing your entire day also in the context of, is it a meme stock? Is it a short squeeze? Is it actual order flow? Are we reading the tape properly? Remember what I said at the beginning of today's Stock Market Live. These are different strategies. Just trading order flow and reading the tape, it's two different strategies. Meme stocks, that's a whole different strategy. Short float, short squeeze, that's a different strategy. So you need to know which of those strategies you're using and then how that affects your profit targets as well as your position sizing going into that trade. Does the stock have reliable liquidity, or is it something that just spiked yesterday? We had a couple of stocks that somebody called out in our game plan meeting last week where yesterday it traded 2 million shares, but it averages 100,000 shares a day, which is practically nothing for an active trader, which increases the risk because liquidity is not there. You can't get in and out where you want to, especially if the stock moves quickly, because it does not have liquidity. So something to consider, which I know I've given you this before, is when you go into the list of ideas and you're looking at the sector stocks, you want to make sure that your stocks have liquidity, which is why we spend most of our time trading stocks that have average true volume of, typically for me on an active day trade, is 2 million. I'll go as low as 1 million for a swing trade, but I want liquidity because if I'm trading size or if the stock moves quickly, I want to make sure that I could get in or out at a reasonable price where I want to. So I want to continue to give you the best stocks to buy now in the consumer cyclical area and talk about some of the ideas. Chewy was one, BBBY. Obviously, the Chinese stocks have a whole other story behind them. But clearly now we've had some nice bullish moves. And now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe even 11 days where it closed above the open. But you can see there's some melted candles. Melted candles, melted candles. So let's talk about that right now. If you're looking to allocate share size in a heartbeat now, you should be able to say this stock has consistent energy versus this stock is a mess. If it has consistent energy and liquidity, you can get in with a little bit higher initial position share size. At least that's the way I do things. If it has a lot of melted candles and inconsistent energy, inconsistent institutional attention, those are the kind of stocks where I would be working my way into those positions as opposed to going in with bigger share size on my initial entry. And I'll give you the perfect example of a stock that obviously meets the first criteria of institutional attention. So you can see here in BABA, it's in the group that we're taking a look at, which in this case here is consumer cyclical, but it has a lot of melted candles. It's inconsistent. Look at all the melted candles. So that would be one where I'd be working to work the order. This is a stock that obviously has massive institutional attention, and you can see mostly large red or large green candlesticks. So even right now, just in that quick conversation, just looking at the daily candlesticks and the reliability of institutional attention should give you an idea of the kind of position sizing you should have and how you should work your way into those ideas. These little moments of decision by noticing something different makes a monster difference over the day, the week, and especially over the year, because now you are trading what you might call the right initial position size based on how the stock normally trades. It's pretty interesting stuff, right? All right, so let's go over and talk about a couple of more stocks in consumer cyclical. A couple of stocks that kind of perked up recently, eBay being one of them. You can see it hit this resistance level like a lot of stocks and just hasn't given it up. So eBay has a little bit of a wall here. So this would really be a two-step trade where we're looking at that as the first one, and then this area up in here as the next place where buyers did something significant. Obviously, Amazon and the big Amazon stock split, Airbnb, also showing some relative strength. Moving on over into kind of the get out of the house stocks. HLT has actually shown some good bullish order flow, got above next levels up here in 158. So that's the breakdown. The other stock that I want to give you today is Uber. And I know this is like, wow, Uber, it's still, it's still bearish and all that kind of stuff, but sometimes you need to dig in a little bit deeper and you start to notice some of the patterns. We had a bullish gap into the 50-period resistance. And when that happens and the stock kind of pauses there for a while, the explosion through that, you can usually get a good 3 to 5 to 10 days out of that when if it finally gets through that level. Another stock that we're looking at that is kind of similar on that right now is Oracle. You can see it danced over here for a few days, and now it's slowly grinding higher. But the stock that I want to compare right now in Uber is IBM. So you can have a visualization of the stock kind of paused there, couldn't get through there. Friday had a big day. Yesterday followed through, and today it's following through early trading now as well. So we broke down a lot of stuff today. We talked a lot about how to trade AMC stock, both from a day trading and a swing trading perspective, the things to talk about from an entry, exit, profit management. We broke it down into consumer cyclical stock and gave you some ideas of strongest market, strongest sector, strongest groups, breaking that down a little bit further. And then we talked about some of the topics that we talked about. If you want, you can screenshot this because I want to inspire you to ask better questions to yourself. This Order Flow Pro is one of my higher level programs. It was an hour and a half call last night, which we have every Monday night. I want to share with you the ideas so that then you can start to ask yourself, am I thinking through my trading deeply enough to trade at the highest levels, or am I simply running scans, waiting for the market to open and then kind of making it hit or miss? If you haven't done so already, our next 14-day bootcamp, where we have a lot of these coaching calls, starts actually next Monday. It's a limited attendance. If you want to learn about it, there's a link in the description. It starts Monday and it's 2 weeks. I want to show you this right here. Okay, take a screenshot of this. These are the topics that we discussed last night, and as I said, some really advanced topics. Think about just this stuff right here, where I walk through how I taught people in my prop trading firm to confidently trade what a lot of people think are the most volatile time of the day, which is the first 30 minutes of the day. Ask yourself, are you trading the first 30 minutes, the first 90 minutes a day in the context of the entire day, or you're just trading hit or miss and hoping you end up making money? There's a very specific strategy for that first 30 minutes of the day. And we use the example of 1,000 shares and how professional traders would allocate 1,000 shares in that first 30-minute window, so that the worst case scenario, you're down maybe a couple of $100. Best case scenario, in the first 30 minutes, you're up 500. And now you have a nice head start on the rest of the day, and it completely changes the day. We also talked about maximum drawdowns per day and how position sizing is put into the trading game plan for the day and how you manage your whole day based on what happens in that first 30 minutes of the day. So I want to put this up here one more time so you can take a screenshot of it and take a look at it right there. Okay. That's the ideas that we talked about. This was also a big one last night too, about has your trade lost its edge and what to do about it? Because if you think about a lot of trades, they're kind of meandering around in that window. They're not profitable. They're not losing trade yet. And you want to know what to do about it. So we brought that up last night as well. John, thank you so much for that. John has been a longtime member of our community. I'm very grateful that he's in our community. So thank you for that, John. I really appreciate that. You know how much that means to me. So if you want to learn about all this kind of stuff in a lot more detail and attend the coaching calls, click the link below. You'll see it in the description. It starts next Monday, and it's a 14-day training program. All right, everybody, I have to get ready for our other game plan. If it's the first time you've been with us, please do me a favor, hit that subscribe button. If you got some value out of this, smash that like button. But more importantly, I think I really want to help you. If you have any questions about stuff we talked about here today, leave a question in the comments below the video, and I promise I'll get back to you as soon as I can. Sometimes it might be a day or two because I'm pretty busy, but I promise I will get back to you. So have an awesome day, everybody. You might have to watch this one more time because we talked about a lot of really detailed stuff as far as trade management today. Go back, take notes, and then leave those comments. All right. Have an awesome day, everybody. Thank you so much for joining me. I really, really appreciate it. Take care now.